everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, January 7th. Another down day in the market. Says three in a row right out of the gate of 2014. Dow Jones down 44, Nasdaq down 18, S&P down 4.5, and Russell down almost 9 points. Relatively quiet, subdued volume, but markets did sell off as soon as the market opened at 9:30. We had a big push lower, and then kind of chopped around lunch and retraced back halfway, and then sold off again at the end of the day. But again, volume was still relatively light, as well as the last 3 days of selling was light. So really not much to be expected coming off of a holiday, 2 weeks of a holiday season. Now, we were looking for more of a retracement back up following that December 31st high, but that did not happen. So what are we looking at here? Well, the one thing I want to pay attention to is going to be the dollar, because the dollar is going to really affect the currency markets, going to affect commodities and equity. So we want to pay attention on what the dollar does in the coming sessions. But let's get right into the indicators. I showed you a bunch yesterday. I just want to show you a few to touch on and see where we go from here to get some sort of clues. Now, we are obviously extended. I'll show that to you in the E-mini S&P charts in a moment. But if you look at we're starting to get a little bit of a curl back here. Now, what usually happens is sometimes it hits that 8 and then bounces higher again. And we could get a little bit of a move higher, which I am still looking for, at least for a couple of days, and then we would reevaluate it if we get anywhere close to the highs. I don't think we're going to look to take out the highs. We may get close to it, but I think that might be a good selling opportunity, that we might have a local top in place. But here's the bullish percent SPX, as you can see here. Now, the McClellan Oscillate, which I haven't showed you in a while, really hasn't done much. We got up to this area here, but again, anywhere between 60 and negative 60 is really neutral territory. But we did get outside that band, as you see, and every time we get near it or close to it, we usually get that retracement back to the mean. Same thing here on the downside. So really not much to talk about, but I wanted just to get it out there. Stocks above the 50-day moving average. Again, we're back into this area, and we are on a sell signal, as well as the other ones I showed you yesterday. But most of the indicators are holding up relatively well, as far as telling us that the momentum really is to the upside. And the bigger picture, momentum is waning a little bit, and that's normal because we are at extensions in the marketplace, but still holding up relatively well here. Okay, one thing that it's a real big concern of mine is China, and I mentioned that to you, and I wanted to show you Shanghai. We have now broken down from this support base here. So this is not a good sign. Remember, China is a huge buyer of our commodities. And if China starts to slow down, you're going to feel it here in the U.S. equities and around the world, actually. So this is something of a big concern of mine. The emerging markets as well really took it on the chin. Descending triangle broke down yesterday below that. I mean, now you're looking at certain areas here where you would get a good cluster here at $38.50 and then $37. So watch this in the coming weeks. We could get some pressure as well in the commodity sector, okay? Here is the FXI. Here's the China ETF. Now we just broke below that 200-day. Usually, if we break below, we try to get back above it again. But this is something that's a big concern, and I want to just keep an eye on it moving forward. Obviously, with day trading, not going to be too much of a factor, but in the overall trend, you want to see if there's going to be a big trend shift in the marketplace here. Okay. Lastly is the U.S. dollar before we get into the chart segment. And as you can see here, it's been basing pretty much in this area actually the fourth quarter, been chopping around this area here. Now, if we can get above this 81 and we get above the 200-day moving average, then I think you might have a bit of selling pressure in equities and commodities. But let's just keep an eye on this, because this is pretty an erratic trader at the moment. It runs up and then runs back down again. But right now, to me, obviously the trend is still down. Lower lows, lower highs, lower lows, lower highs, as you can see here. But once it breaks this bearish symmetry and we start to move higher, then you got to really use caution here and tighten up any of your longs if you're swing trading or a longer term investor. because the dollar could put pressure and will definitely move the equity markets and the forex markets, which really haven't done much to the latter part of 2013. Just recently, we are seeing a wake up in the commodity market, in the forex markets, which is going to be exciting because it's going to create a lot of opportunity as well. Okay, so now let's go into the chart segment. I just want to show you a few things here. Now, I've showed this to you many times. We are at a huge extension from the monthly chart from the 2009 lows of 666. We have now met our extension target here. So this to me tells me tighten up your stops if you're still swing trading, because of the fact is we are now exceeded, and if you can see how far away we are from the 8, the 20, 50, and of course the 200. Yes, they're all showing bullish symmetry moving up, but you have to use caution here because a pullback is going to be in order. Now we've gotten a pullback already in the first 3 days of the year. Let's see if that's going to develop into something deeper for a correction, or is it just a little bit of a pullback and we start buying the markets again? Okay, here is the daily chart, and here you can see here we had bull flags. Bull flag, we popped up. Bull flag, we popped up. Bull flag, we popped up, and then we sold off hard to this line from this doji area. And as you can see here, we held this trend line. So logical spots are going to be, you know, the 1814, the 1800 round lot, and then of course the 1789, 1781 area, which is that 1618 retracement from the high to the low here. So we do have a bull flag, or call a bullish falling wedge, if you will, in the 20. So we are up nicely in the pre-market session here, up 5 handles now. It's about 4:20 a.m. in the East Coast. So that's a good sign that maybe we get a little bit of a follow through to the upside. But then we need to reevaluate in the next couple of days and see really where this market is going to go. Right now we're just kind of chopping around on low volume. As everybody gets back to work, yesterday, today, tomorrow, we should see volatility and volume start to pick up again, which is a good sign. So this is not a bad pattern here. Now we just need to really see if this can really break back out above this 1830 area. Here's the hourly chart. Here's going to be the area where I'm looking at, that 1820, as you can see here. Big area. So 1820 and close below would probably, for now, put a cap on this uptrend. As you can see here from the hourly chart, we're making lower lows, low highs. So we do have a bearish pattern here. But again, we're still starting to break back above it. So 1830, I'd really love to get back above the 1827, 62, 1830-ish area, and that would really get us at least maybe a run, maybe not to the highs, but maybe up to this area here, 1838, 1840. But we'll see. Take it one step at a time. But it's a good sign that we are up a little bit in the pre-market, session. Okay. Nothing really has changed. As you can see here, December 31st, we had the all-time high, and now we're down 3 days in a row, relatively low volume, and we're unwinding that overbought momentum indicators on the MACD and the stochastics, which is a good thing, because as we unwind this overbought reading, and if it still chops around and still hangs above the 20-day moving average, that's going to be a good sign that the markets are revamp their buy pressure to the upside, and at least challenge the highs, and then we would actually again reevaluate. As you can see in the diamonds, diamonds here did the same. 3 days. We had really 2 days. We had inside day, and we're still here. We're still holding up way above this area. Now this here is the 2012 November lows, so holding up relatively well outside of that that uptrend line. So still everything's intact for a move higher, but things could change relatively quick, so that's why I just want to say use caution here. Okay, transportation sector holding up. We have the 20-day moving average, and as you can see here in the indices, we are still above the 20-day moving average, so really nothing has changed. Volume was relatively light, so far so good. But if things start to break down in a big way, and you see volume start to pick up to the downside, and we have marked some distribution days, you got to really use caution here, because now a lot of retail is caught to the upside in these areas. If they do decide to sell off, you're going to get the first round of selling when it breaks below the 20. That's my guess at the moment. Russell 2000, good gauge of risk, as we can see, and it is also above the 20-day moving average. So nothing wrong with the charts. Looking still constructive here. Here's the XLF. The banking sector here still doing relatively good. I still like the banking sector. I like the home builders for 2014. I still love technology as well. But again, they're a little bit extended and they need to come in. As you can see here, we're getting a couple of dojis Greystone Doji, as you can see here in Goldman Sachs. And if you look at JP Morgan, we have another Doji over here, as you can see. So this here is telling me that, okay, the market had a nice big move and now was a little tired. So let's see. Let's wait for the pullback. Let's be patient. I'm stalking these here for an entry in hopefully in the coming weeks. Apple had a little bit of a bounce, just got above the 50-day moving average. I think it needs more work here before we look to get it. I'd like to see an additional breakdown to at least to the 520 before we really start to put some sort of a buy long trade on. Easy to manage because you'll be back below this area here. Lastly is the Qs, as you can see, we're still above the 20-day moving average. Again, a lot of these key sectors are holding up relatively well the last 3 days. And again, really the 3 days of selling was not much at all. So let's see if we get a little bit of a pullback. And if we do get that pullback, and we get the market start to push back up again, let's see if we actually put some sort of a tradable top in place where maybe we get a little bit more downside correction, and then the markets actually start to move higher again in the coming weeks. Now, remember, we still just really quickly, I want to touch on gold. Gold is coming into seasonal strength. Actually, the metals are coming into some seasonal strength January and February, but I'd like to see gold actually sell off back below again, and I think you're going to get that break below 1200. Yesterday, gold sold off 30 handles in a matter of minutes and then rolled back up again. So I think gold is still vulnerable to the downside. If you are looking to get long something, the silver would be the best bet. Silver is actually stronger this time of year than gold is. So just a heads up with that, okay? But we're still looking at gold for either a quick downside correction and then look to buy that below 1200, somewhere between 1000 and 1100 to start accumulating gold. Crude oil, still no trade. We're still bouncing around here at these lower levels here. Crude is up about 39 cents in the pre-market early morning session, but we want to see crude start to base here, put in some sort of a base before we look to nibble in the long side again. All right, guys, that's really about it. Have a great day today. Real cold. We've got a deep freeze in the East Coast, so hopefully you're in a warmer climate than we are here. Have a great day. We'll speak to you tomorrow. Take care.